There's a money printing party going on and the entire world is invited. The EU just approved a $2.1 trillion increase in their budget. Bank of England added an additional 131 billion in asset purchases in June. And our very own Fed announced it would keep lending until the end of the year instead of ending it in September. It's also going to keep the benchmark lending rate unchanged at basically zero. Meanwhile, bank indexes show that financial institutions in the UK, Japan, and the EU are about to break support levels that have held up since the mid-1980s. The result? The worst dollar value we've ever seen since May of 2018. And the US index against a basket of fiat money dropped to 92.82 on July 30th. It's odd if you think about it. Governments are printing more money to help the economy. The logic is simple. If people have more money, they can spend more. But the more money they print, the more the dollar loses value. So it's exactly a surprise when Fed Chairman Jerome Powell told the press the pace of recovery looks like it has slowed. We're not saying that what the Fed is doing is an absolute sham. The Fed is doing what it can do, but what it can do is not a comprehensive solution to allow the economy to recover. To improve the economy and the value of the dollar, we need to improve our GDP, our gross domestic product. And that's not easy to do when most businesses are not open. The US Commerce Department reported the GDP shrank by 32%, the worst ever. Not surprising considering we have 1.4 million new unemployment claims several weeks ago. Collectively, there are more than 54 million Americans that have filed unemployment claims. We need to strengthen the world's need for the dollar. That's not easy to do when other countries' economies are also in shambles. They hardly have enough to keep their currency going, let alone buy currencies of other countries. There are many factors in play and none of it is in our hands. We can't stop the dollar from losing value, but there is something we can do to protect ourselves right now. We can take what we have right now and re-examine and secure our financial future. Are our bonds, funds, and stocks future-proof? Given the changing hands of the market, are we investing in companies that will flourish post-COVID? Gold, silver, and cryptocurrency are some of the most stable investments. Start looking into them. Bitcoin is being projected to make a dash towards 28,000 per coin. On the other hand, gold will most likely exceed 3,000 based on Bank of America's projection, and it's most likely going to increase $5,000 mark in the long-term bull run. And it's not surprising. Gold has been the only asset that has weathered through all economic storms, and especially this latest storm. So make your move. Don't let the millionaires and billionaires hoard all the gold. You need protection just as much as they do. If you're interested in investing in precious metals and you want to talk to a no-hassle representative that has experience in physical metal, give us a call. Phone number is 877-646-5347. Our phone lines are always open and we're happy to answer any of your questions.